Are you a broke loser? Do you want to stop being a broke loser? Well, buy my book on Amazon. It's $2.99 for an ebook or $9.99 for a hardback. It's called Stop Being a Broke Loser. If you buy this book, you will no longer be a broke loser. So buy it now. Oh, JD Stock, why didn't I buy you back in the day? Maybe because I am... Never mind. Anyway, welcome back to Strongman Personal Finance. Today we're going to talk about JD, the big e-commerce retailer in China. And yes, there's a lot of risk for investing in Chinese stocks, okay? The government can come and clap some cheeks, so you got to be really careful. And if you don't like Chinese stocks, you don't have to buy them, okay? But if you're willing to take the risk, and you can even compensate with that by having a higher discount rate, there are some juicy opportunities. And especially during the most recent sell-off, JD was looking pretty freaking good. And I didn't buy it, which is fine. I got Alibaba. But JD was looking pretty juicy. And I actually bought or put in a buy limit order to buy about 15 shares of JD. Should it ever get down to a point where I think it's a freaking screaming deal. So, JDizzy, what is it? It's a technology-driven e-commerce company. It engages in the sale of electronics products and general merchandise to include audio, video, products, and books. Operates through JD Retail and new business segments. It has online retail, online marketplace, and marketing services. Okay, so it's just a massive freaking company, okay? It's got a market cap of $131 billion, and it currently has a PE ratio of 22, which is pretty freaking low for how fast the revenue is growing. So, what was my strategy to determine my buy point? How did I know what price to put my buy limit order in? Well, I just made it up because I follow me, Kevin. No. So what I do is I have access to Morningstar. Morningstar is an investment research platform. Go to your library and see if you can get it for free, because if you can, then you can create your own analysis tool. I use Everything Money's format, but I'm able to tweak it to my own needs, okay? I like their format, but, it's not the perfect ideal thing for me. So if you get Morningstar, type in the company up here, go to full key ratios data, go here, key ratios, this is JD, ADR, hit export, it exports an Excel sheet, take that Excel sheet, copy it from this is if you're using mine, B4 to L4, and then all the way down, and then you can paste it into your analysis tool that you make. So I have my own that I made, and I'm hesitant to share this because it's very similar to Everything Money's, almost exactly like it. Maybe because I use their format. And I don't want to get sued by them, so I'm going to talk to them, I'll email them, and I'll see what they freaking say. I mean, I think as long as I don't charge for this, I won't get in trouble. Anyway, so I copied all JD's ratios into here, and I did some, calculations, but I've highlighted all the things you need. So you can literally, if you ever use this tool, put in your assumptions based on what you see here. Now, let's talk through my assumptions. JD, it's currently selling for $83.87. Revenue growth, I said low of 20% over the next 5 years, high of 25. How did I get that? Well, I used the Morningstar data. Look at the growth over the last couple of years. 39%, 27, 24, 29, 26. Now, it's always good to be conservative because as the company gets bigger, the growth is going to slow down. So I said low assumption 20, high assumption 25%. You can always use your own assumptions. Share change. These freaking clowns seem to love to issue shares at JD, all right? In the past year, they've issued, a 4% increase, freaking shares. And on average, it looks like anywhere between 2 and 4% would be a reasonable assumption for share dilution. So they seem to be a pretty big fan of that. So going from left to right, worst case, they issue 4% more shares per year for the next 5 years. Best case, 2%. They've been freaking doing it, so I think they're going to keep doing it. And it doesn't seem to be letting up. I don't know why. Profit margin between 2 and 6%. How did I get that? Well, back to my data. 2019, profit was 2%. 2020, 6%. Over the last 12 months, 4%. it's kind of been all over the place. JD looks like it was unprofitable all the way through 2018. So only recently have profit margins been positive, and there's really not much to go off of. I think 2 to 6% is decently reasonable, and they might even improve that, but who freaking knows? Free cash flow is a percentage of revenue. Oh yeah, I got it from here, just like everything else. I said between, what, 2 and 4%, just based on the last couple of years. It's been all over the place. I mean, it's kind of hard, but, I mean, that seems pretty reasonable. It's kind of a low-margin business. PE, I said 15, 17.5, and 20 in 5 years. So I'm projecting in 5 years, the price-to-earnings ratio will be 20. Right now, it's like freaking 60-something, I think, at least according to Robinhood. Robinhood's trash. They're really weird with PE ratios. But, I mean, that's pretty reasonable. I think it'll be higher than normal, than my normal 8, 10, 12, because this is a growth company. And the revenue's growing pretty freaking fast, so people are going to be willing to pay a higher premium for that growth. Same for price to free cash flow and desired annual return, 15%. So, boom, I got my numbers. Oh, but I have to convert them because these numbers are in the Chinese yuan or renminbi or whatever you freaking call it. So I converted it with today's conversion rate, and I get my buy points. Now, look at that. Middle assumptions with a 4% profit margin, 22% revenue growth. It's a freaking buy right now. It's almost exactly on the, it's almost trading exactly for what it's worth for a 15% return. Look at the middle assumption for discounted cash flow value, 62. Now let's go to Robinhood, and I'm going to show you how freaking juicy this stock was not too long ago. So on July 27, it was trading for 64. That's pretty close to our low assumption of 62.45. Not freaking bad. And in August 19th, it was trading for 62. So even on the low end for the middle assumption for free cash flow, 62, buying at that point would give you a freaking 15% return every year over the next 5 years. And look what happened. Right when it bottomed at 62, it freaking shot up to 83, whatever it's trading at now. It's almost like there's some kind of logic there. It's like some people are doing discounted cash flows and they're buying stocks when they're a freaking steaming or screaming deal. So I feel like I missed the boat. I put in a buy limit order for $65. I'll buy a couple. I'll buy about $1,000 worth of shares. Whatever, because I think it's a good deal. But I don't know if it's going to go down to that low. We'll see. But that's my thoughts on JD. I think it's, when it comes to a lot of the stocks nowadays, if you really aren't worried about China risk, the government cracking down, it's not a bad deal right now, okay? And if you want a 10% return, I mean, I think it's a screaming buy. 10% return based on discounted cash flow, $76. Okay, still a little overvalued. But when it comes to multiple of earnings, 102, that's pretty good. And if PE ratios are higher than normal, I mean, you could potentially do pretty freaking well. It's all based on what your assumptions are. Yeah, look at that. PE of 22.5. I mean, it's already a screaming buy for a 10% return. 15. Yeah, I mean, not something to discount immediately, okay? But don't get pissed if these stocks freaking crash again because of all the delisting fears with China. It's really up to you. I'm willing to buy the stock at $65, and I'm only putting roughly $1,000 into it because I'm not going to buy individual stock unless I get a screaming deal, and I'd rather max my tax advantage accounts and buy Total World Index funds. Anyway, that's it. That's my thoughts on JD. I'm really pissed I missed that opportunity, but I wasn't doing this previously, and that's to my detriment, I guess. Anyway, I hope you liked the video. Like, subscribe, tell your friends about me. Buy my book, Stop Being a Broke Loser. It's on Amazon for $3. And I'll see you later. Choo!